approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall, like sleigh bells ringing before the call. With bulls charging like a reindeer in flight, and bears hibernating on a snowy night. The angle will keep you in the fight. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Deck the halls with charts and graphs, where financial wisdom wraps in wreaths and laughs. In the Santa rally, watch it soar, with profits climbing more and more. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And today's a big day, guys. We have JOLTS today. The JOLTS report's coming through today at 9 o'clock, and not to be overcasted or not to be overshadowed by what tomorrow is FOMC. So we have a very, very big 2 days here on the market where the crux of the volatility probably is going to lay for the overall market. So we'll get into that in a little bit here. Looking at the market open right now, or at least in pre-market, we're chilling around the 683-ish area. Yesterday we saw interesting price action as the day was mostly a bearish day. To the downside here, let's zoom, let's do the 10-minute candles into yesterday, and basically shot down the entire day. Even when you had a chance there for the bulls to recover, came back down up until the end of the day, where we closed right in between these two key LOIs here at 683.57 and 683.67. So that's kind of an interesting spot you're going to want to keep an eye on today as we approach the market into JOLTS. And again, JOLTS is coming out. Let me triple check, but I'm 99% sure it is at 10 o'clock. But let's just verify, because sometimes things change. JOLTS is at 10 o'clock, yes. So that's really the only big thing today. We've got Trump speaking, or attending, I should say, Vance's Christmas reception, which wasn't on the docket yesterday, but it is now today. That's at 1:15, so nothing too much there. However, this is also new. This was not here yesterday. Trump speaking on the economy tonight at 6. So be mindful of that, especially into the overnight session, leading into FOMC, coming off of JOLTS. That actually could obviously throw a little extra volatility into the overnight session, and that wasn't on there yesterday. And this is why I always tell you guys, you want to do your catalyst watch before you start the day, and you want to check it frequently, because sometimes things get added, removed, changed, etc. And something like that wasn't there yesterday when we looked at Monday, which is like a cursory glance. So it's important to check these things every single day to see if anything else was added extra. In that same vein of that thought process, I'm going to look forward to tomorrow just to make sure nothing extra was added. But it's just looking like FOMC is going to be the big one tomorrow, obviously. But nothing else looks too different or pressing. So versus what we covered yesterday. Obviously, we have the 30-year mortgage rate tomorrow. But outside of that, nothing else is too different in regards to what we're looking at for catalysts between today and tomorrow. Toby saying good morning to the Americans. Okay, good morning to my European friends. Actually, it's probably afternoon to you guys, so good afternoon, Europeans. Hatchet saying morning. Hey, have you seen the horizontal ray line setting in Weeble? It draws to the right of the origin, but not to the left. Can't believe it took me so long to find. Yes, I personally don't use it too frequently, but yeah, you go right here and horizontal ray. Boop. Yeah, it's fine. I prefer just doing a straight line, but yeah. It's not too shabby. There's actually a lot. That's why I like Weeble quite a bit. There's a lot of pretty decent features in here, and I think it's a very clean, snappy, appealing UI versus like using a TOS. TradingView is also pretty good. I use both. I use Weeble and TradingView. I just prefer using Weeble because I also think for you guys watching at home, it's more accessible, especially if you guys are newer to trading or whatever. Weeble's free, right? So, and they offer a great suite of tools you can use, so it's really nothing to scoff at. Really great platform, not sponsored or anything. I just think it's a solid platform. They offer great tools at a price of $0.99, so or $0.00, so pretty solid. Eddie dropping the euro in the chat. You know I got this for you every morning, my friend. Dropping the euro right back to you, my friend. Hope you guys are doing well and enjoying your Tuesday. It has been an interesting day for me, but that will be a conversation for another time, or if the market slows down, which, looking at how we're opening here, we closed in this spot up here where we have these two key LOIs, so getting underneath it, showing a little bit of bearishness. Obviously, you see that first real break here coming through at around 8:30. Looking like we're probably going to get trapped here north of 682.74 and south of these two LOIs pre-JOLTS. Now, as it pertains to JOLTS specifically, I'm not, how do I say this carefully? I would lean more bearish on JOLTS in general on the market, but I'm not going to pretend like, I'm going to predict that JOLTS will be bullish or bearish. I'm just saying I would prefer, here, let me say it that way. I would prefer if JOLTS was bearish, mainly due to what I want for the rest of the week into the end of the year. So if JOLTS is bearish, and if it comes out bearish and we see bearish price action on JOLTS, I would look for either a sideways or more bearish day into the close, into the open tomorrow, and then hopefully, ideally, FOMC will be a bullish move to the upside to hit my 700 price target by the end of the year. Reason why this is, I think it allows the liquidity sweep to the downside with a reason, which is JOLTS, and then really reversing that real quick with FOMC. Now, with FOMC specifically, what you want to keep an eye on is if it comes in as expected, and if Powell is either neutral or dovish, either one, for a bull reaction. Here's why. The market right now is pricing in some level of uncertainty these last, well, I should say the last 2 days, yesterday, and probably today as well, as we saw the VIX come up a little bit, obviously, and the market come down. I believe what we're seeing is the market hedging for these events, preparing for these events. Assuming what is expected comes through, you're removing that uncertainty from the market. So when we remove the uncertainty from the market becomes certain again, and it always resolves to a bullish move, because the reason why hedging was taking place is to prepare for the unpredictable, the uncertain. So when we remove that catalyst, when we say, hey, things came in as expected, which was like a 25-point basis cut, and Powell said either very neutral commentary or dovish commentary, we pull all the fear out. There's no more risk. There's no more fear for such a massive catalyst before the end of the year. So consequently, assuming and FOMC is going to be the bigger data point versus JOLTS, not that JOLTS is small by any means, but FOMC is going to be the bigger watch into the end of the year here. But assuming things come as expected, and also with no hawkishness, I guess, from Powell, we can safely assume the market will resolve bullish into the end of the year. Guys, if you haven't already, do me a quick favor. You guys know I like to ask you at least twice a stream, wherever you're watching from, whether it's YouTube, X, Instagram, Twitch, or Kick. Interact with the stream in your favorite way. I know a lot of you on YouTube like to drop comments in the chat, and I love talking to you guys, so I encourage you to interact with me that way. However, wherever you are, if you could do me a quick favor, drop a like on the stream, interact with it in your favorite way, and most importantly, pop over to YouTube and hit that subscribe button if you haven't. Once we hit 500 subscribers, this show will be an everyday show, so if you like the content, you want to see more of it for absolutely free $99, all you got to do is hit that subscribe button on YouTube, and once we hit that goal, this will be an everyday show. And as always, I appreciate your support of the program. As it looks right now, we're about a few minutes out until market open, and SPY wicking that lower LOI that I laid out to you guys at 682.74 area. Now, it could break this into the open, and in the event it does break it into the open, this is kind of what I was watching for yesterday. I was looking for a sweep of 680 yesterday. If you're in the Discord, which the link's in the comments down below. If you're in the Discord, I was saying how 680 was on the board yesterday. It was a possibility. And then we started to reverse out a little bit, so it seemed lower probability as time went on. But it was an opportunity yesterday. There was a chance of sweeping 680 yesterday. That could still be today. It really depends. We'll see how open goes, obviously. I would prefer to, in a perfect world, so here's your forecast for the market open. I would prefer we sit in this chop zone until JOLTS, and then JOLTS come and we sweep 680 or even get down here to these two key LOIs. So I would prefer a bearish reaction on the market on JOLTS because of what I outlaid to you guys a few minutes ago with how ideally if we have a bearish JOLTS and a either neutral to dovish FOMC, or generally just what's expected, then the market will resolve higher. We're sweeping, we're taking out lower end liquidity here on the daily chart, and it allows some level of a cool off here before going back and pushing higher. So that would be ideal in my opinion. Before we see JOLTS. I'm sorry, before we see FOMC. So that's just my take on it. We're going to watch it as it comes through, and we'll react to the price action and the volume. Personally, I probably won't be taking day trades until after 10. So if you're here for that, I'm sorry, I probably won't, just because the risk to reward from open until 10 is going to be just kind of a crapshoot. You could play level to level here, like I outlaid, but depending on how IV is on the open, it's probably not going to be fun. And you have a strong chance of getting crushed off of JOLTS if JOLTS is a nothing burger as well. So there's not really good risk to reward here. The better opportunity to wait after JOLTS, let the trend establish itself, let things cool down, and you could play for the rest of the day, theoretically, because we don't really have anything else on the docket in terms of catalysts. So you can actually play just straight price action and volume if you just wait for that to go by. So if you're a day trader, my personal take on it, I would personally wait till after JOLTS to play a move, depending on how volatility looks. We could have very low IV, I doubt it, but we could have very low IV, and that would change my thesis here a little bit. But if we're expecting or anticipating normally higher IV pre a big data point, which is common, then I would probably not touch day trading prior to that event. And that really goes for anything. It really goes for any of the Mag 7 names, any of the indexes, any individual name, unless you got strong volume pushing, and you're going to get in and out. You're going to be in and out before 10. Otherwise, I would just be a little cautious. I like when I can get into a trade, and obviously if I can make a gain on it, go risk-free. So if that opportunity presents itself to go risk-free into the data, then I'd like to do that. But if that opportunity doesn't present itself, meaning we're just ping-pong around in here, then I don't want to take my chances there because there's a higher chance that I will have a loss versus a gain, and that's not why we all show up here. We all show up here to make some money, not lose it. So let's get ready to prepare for the start of the day.
The market is about to open. It's time to start the day.
Alrighty, it's looking like the SPY is going to open right around the 50 MA here in the pre-market, and we are now open right now. Open price around 683.10 off of that pre-market POC here where the 50 MA is here. So you're basically also the midpoint in between this little chop zone here. So you're going to be, I mean, I don't think you could open more neutral. You're in between these two key LOIs here, and you're looking like you're breaking that 50 MA real quick and a quick spike up. I wouldn't get too excited to the bull side here unless you break that top line LOI with volume. But I think, again, the higher probability here is to chill around like 683 into data for the next like 30 minutes, ping pong around in here, nothing crazy. Looking at the Qs, got a little spike up and coming down off the off the open, not the pre-market. And IWM leading the way. So again, as I like to highlight to you guys, this could be the early signs of divergence. We're only a few seconds, 1 minute into the market here, but we're showing early signs already of divergence with IWM pushing up and the Qs pushing down. This is a common thing that happens that I highlight to you guys because it kind of gives you the idea of where the money's flowing and who has the strength. The other thing that I'm noticing right now is RSP, although moved down, is now green on the day. So it's showing us between RSP and between IWM that the tech sector mostly is what's weak right now, causing the market to sell off. Or get stuck in this chop zone, while the underbelly of the market, as I like to call it, your Russell 2000 and the other 493, the breadth that's not the Mag 7, seem to be doing all right on the open comparative to the Qs that are breaking the pre-market low here. Pretty bad. and the overall market, which is going to be sitting, again, in my opinion, in around the 683 spot until we get data. That seems to be how this is going to play out at this moment in time. Looking at how IWM is getting a solid rally here, honestly. 1 point off the first 2-minute candles is pretty fantastic, and it's looking like RSP is going to try to get a little push here as well. Let's take a peek at volatility. Right now, the VIX is up at this LOI here at 1718, so expect some level of reversal there. You got 3 levels up here to the upside if we see a break that we're going to act as resistances. As I said back on December 1st, I believe, I don't really anticipate VIX to go north of 1818. There's a chance there, and if that does happen, it's more than likely going to happen with FOMC. Outside of that, probably not going to happen. So just keep an eye on the VIX in case we do get some upside on volatility. But this is going to be your first sticking point here to stay under that 1718 spot. So we'll see what happens there. VVIX is still south 100, so this still overall supports a bullish narrative. In fact, if you're looking at the daily chart here, you did get a little pop up here on VVIX, and VVIX moves just like the VIX tend to go up faster and come down at a slower rate typically, which is, you know, when you get a big spike here, it comes down a little bit more aggressively, obviously, but seeing more of this kind of price action and then getting a pop of 1 to 2 days on your VVIX and then getting back down to this kind of melty, slow move down is more atypical of the VIX and volatility as a whole. Looking at NVIDIA selling off here in the open, it did have some after-hour news yesterday, which affected things quite a bit in the after-hour session. Now looking at NVIDIA, we're getting near that 183.30 level, and I've told you, I think I said this yesterday, but I've been saying it ad nauseum. This is such a key level for NVIDIA because it's a weekly level. I might just take a stab here, actually. All right, I'm going to take a stab on some of the 185s at 279 for this week. Sorry, I had to type that out. And I'll put it up here so you guys can see. But I got a 279 entry on that. Simply playing that 183.30 spot. So we're going to watch this real closely. Obviously, high volatility here. You might just put a trim on this 184.55 and then slap a stop loss on. So be ready for just kind of a quicker play here in general. So we'll see how that reacts. It would be nice if we can get back over this, pushing the money. And obviously, we're playing a weaker spot here. But you could see when I entered in, got it around, like I said, 279-ish. And it was on higher volatility, so these could decay a little bit. We tapped that level, that 183.30, and playing here for a quick volatile reversal to the upside and crack this 184.55. Hopefully go back in the money here, supporting the chop narrative on the day in general. But that may not happen due to how we're seeing the Qs kind of lag while IWM is rallying pretty hard here. So even though we're playing a key technical level here on NVIDIA that should more than likely hold, I don't anticipate it breaking, especially before a data point. I want to at least be realistic here with my goals and see definitely taking a trim out here at the 184.55 spot and then kind of slapping a stop on it just to de-risk for a potential downside move. So we're going to see if we can consolidate here around this 184 spot and then push back up over this 184.55 spot. Probably wouldn't be a ton. Realistically, yeah, $3, target like between 3 and 320 on an exit, or at least on a trim, I should say, before slapping a stop on. Like I said, I do anticipate kind of leaving a few wicks down here and going up, getting over this level, and then kind of basically going in the money is where I'm looking here. All right, I'm going to trim a few out here. Nothing too fancy, but just taking some profit off the move. That's only going to be 6%, but hey, better than nothing. Because as we approach that upside that upper end LOI, that could obviously act as a resistance. We also have the AEMA here as well. So I'm playing a reversal play here, so I have to be realistic and understand that I bought these contracts at a period of higher volatility, so I need to react with the higher volatility moves. Getting a quick pump like that, I need to take profit. And I got a trim out at 297, so that's why I even said it's right around my target of saying around $3, 320 is where I want to take a trim out. So that's where I took a trim. But we're leaving these wicks behind, which is a really nice sight to see here. We're respecting, or at least floating around this POC where there's good volume here at this 184.05 area. So I obviously wouldn't be in the trade if I didn't think this. I do think we're going to get a pop over this 184.55 spot. That being said, SPY is tapping the 200 MA, and we're at this top line LOI here. So breaking above this, if that does happen, which NVIDIA would support that thesis if NVIDIA gets over that LOI, that would obviously add some juice here to SPY. Could invalidate my little chop thesis here before JOLTS, and if that does happen, this puts this wider range up on the board for right now, at least. Getting a nice quick markup to 685.54 could be pretty sweet, especially if we get that reversal on NVIDIA that would support that thesis as well, pushing to the upside and maybe going to 186.21. So it's possible that we break out of the predictive chop range here, but I would look for NVIDIA to be the stalwart, to be the one to give it the juice to go there. So we'll keep an eye on both at the moment. Qs again, a nice reversal back at open price right now. IWM is still rocking and rolling. So it's looking like IWM and the Qs are trying to stay on the same page. Nice pump here on the Qs. This is your trim again if you missed it here on NVIDIA. You got about 296, 295. You see the fills right up here. So you're seeing that in live time, which is where I took my trim at 297 for about 6.5%. There's $3, 305. I might take another trim here just to be safe. I'll see how we react here. There we go. I'm going to trim out some here as we're near that LOI right now. It's going to give you 11%. Again, nothing too flashy, but money is money, right, guys? So we're going to see how we react here. Now I'm going to put a stop on. Sorry, I'm typing this out. So we're putting a stop loss on here because we're hedging our bets, right? So I have a 279 entry that gives me about 30 to 20 cents a buffer here. Not a lot of breathing room, but I'm being realistic. I'm playing a reversal here, and we're tapping an LOI here. So this breaks with volume. We could get a nice pop. I can make a lot of money. However, this is a resistance spot, so I need to understand that there is a chance that I get a reversal back down to the downside and get rejected. So this is a good time where I have a great entry that offers me potential more, like good amount of additional upside here, but I can put a stop on where I'm not going to lose any money. So good win-win trade here. Looking to go in the money on here for my next trim. And we are right there. Here we go. Trimming out now. There's 20%. Next trim is going to be runners for context. And for additional context, I'm about 30% size or so. So again, not shooting for the moon here in terms of both a percentage gain and a dollar gain, really. But still, getting to 335 from 279, you're looking at $21.56 a contract. It's pretty solid. That's how I like to look at things. We've just broke the red SAR as well. So my next trim spot I'm looking for is going to be somewhere up here, just shy of 186. It's going to put me $1 in the money, so these will appreciate very quickly as we get up there. So this is going to be pretty solid if we can get up there. But again, this is why we can manage this trade. This gave me a great opportunity to get in on potentially a little bit of a risky spot here. We respected that key area, and now we're reversing here. So it allowed me the opportunity to put a stop on to still make money on the trade, which is the most important thing, right? And now I can write it per se risk-free because I have a stop on. So now if it just knifes down because something happens, I don't lose any money and I keep the gains I made. So it's a win-win both ways. Omar saying, what's up? Negum, good morning, my friend. Omar dropping the GGs. Eddie dropping the GGs. Negum says, damn, NVIDIA just made me 350. Hell yeah. Love to hear it, my friend. And guys, this is just a taste of, when the opportunity presents itself on live, I'll take a trade with you. But it's just a taste of what we do in our Discord community. Yesterday, if you were part of our community, we had a killer day. Me alone, because we also have X and Grumps who put out fantastic trades and information. But me alone, I went 5 for 5, just trading the SPY. Got 11%, 8%, 27, 43, and 22% gains. Yesterday was also a pretty fantastic day in our community. If you want to check that out, link is in the bio. Hatchet dropping the GGs. I need to get a GG sound. I don't know what that would sound like, though. Probably sound pretty cringe. All right, we are coming down here, so just make sure you're putting a stop on. Now, there is a chance if we break below... IV decay could get us too, where I could get stopped out here, but... Getting under like 184.23, this is probably going to get shot down. if we're respecting that general area, there is still a chance of kind of building out a stronger move here for a reversal. But we also want to keep in mind the time of day. Remember, we got 19 minutes until JOLTS, so I want to be a little bit mindful of that, because unless I can get to runner size with a risk-free position, I don't really want to play in the playpen. I don't want to be in the market at that time because I could lose money. I can make money too, but my goal is to make money, not lose it, right? That should be your goal as well. So again, to reiterate, my next price target for these contracts is going to be just shy of like 186. It's going to be like 185, 80-ish. Kind of depends on volume and how these candles look. But we are kind of consolidating here. I don't like this look here. If you're in a smaller account, I would tighten up a little bit probably on the stop. Maybe go to like 290 just to protect your profits, because in the event it falls too quickly or something, you could get an unfortunate fill. And if you're in a smaller account, obviously want to take care of you guys over the rich ballers that I have in the chat. Those of you that are out there. We are consolidating above this LOI, which is a good sign. However, if we don't get out of Dodge here sooner than later, this will come back down. I'm telling you for a fact. We got to move in the next, I'll call it 3 minutes. If we don't break out above this high, basically get above 185 in the next 3 minutes, I'm going to close out due to risk. Because also, you got to keep this in mind. Even though I've made money on the trade, I still have contracts on the line here. And just because they're available, I want to make sure if I can realize more profit, I want to take the profit. So if the trade looks like it's going to be sour and I'm still green on the trade, I don't just want to keep it a stop loss at break even just to gamble. I want to realize the profit I have. I want to make the money that I can make. And that should be your mentality too. There's times where if you're a quarter runner size or whatever, and you've got like let's say you start with 100 contracts and you got 3 left and you just want to leave it on because you've made a ton of money, those contracts are already covered, whatever, then by all means, do your thing. But this is a scenario where, like I said, I'm about 30% size here, and it's not looking the safest. We are making higher lows here, again, on like a very micro scale, looking at the 1 minute chart. But I don't like this momentum at all. So I might get out very soon, especially if we break this low here. All right, I'm closing out. All right, all out in profit. See, in a scenario like that, closing in profit. In a scenario like that, that event is where I would do like a market order. Because I know that's been a question too. When do you do a market? When do you do a limit? If I know that I've already, in this case, I've got some buffer. The price was at like, I got like an average fill of like 285, something like that, right? So I'm still about 6 cents above my stop. And realistically, unless it knifes, I'm not going to get slammed too hard on a market fill because I'm already risking 279, right? So I'm already willing to go down to 279. So in that case, getting a market fill just to get me out of there is worth it. Now, we did respect the POC here, but we did also break the level that I was watching out for, this 184.23 spot. We did close beneath that on the 1 minute candle. So following my risk rules here, this was a good trade. We did everything by the book, by my book, at least I should say. And it was a solid 20% gain. So no shame in my game here. I'm very happy with that. As I like to tell people in the Discord, there's times where you wait around months to make 20% gain. So you can make 20% gain, even 10% gain on a day trade. You take that. We romanticize massive large gains all the time, right? Massive percentage gains, and we minimize how much money we really could make each day if we compounded those 10 to 20% gains. If you actually sit down, here's something that might blow your mind. If you are a day trader and you made, and I don't advise doing this, let me make that clear, but if you made 5% on your portfolio every single day for a full month, you double up your portfolio by the end of the month. Now that also involves you full porting, meaning you exhaust all your funds every day, which strongly not advisable. But I'm just making a point of saying that those tiny gains will add up over time. Now, you could take that same logic and use half your funds and make 10% every single day, or a quarter of your funds and make 20% every day, right? Theoretically. So you could break down the math however you want, but when you actually sit down and realize, like, how quick was that? That was a few minutes, right? And you can make 20% if you close out the whole thing. You could really break it down and understand what would be an advantageous strategy to you, where you're lowering the amount of money you're risking by a dollar amount, but you're increasing your exponential growth longer term. And I think that's something that's really overstated or overlooked I want to say in our industry, as we romanticize large gains every single day, and that's not really the end goal. The end goal, if you can hit those ground balls every single day, guess what? You have more money to trade with every single day. So if you're bragging because you have a $1,000 portfolio, and this isn't targeted at anyone, it's just, figures of speech. If you have a $1,000 portfolio, you full port, you make 100%. Now you got $2,000. That's great, right? But if you steadily built that up, and now you have a $10,000 portfolio and you make a 10% gain, you still have the same $1,000. Money spends the same way. The percentage is lower, which theoretically means you took on less risk or exposed a lower dollar amount to get that gain. But you still made the same amount of money. So it's very important to focus on the dollar and less on the percent. At least that's my humble opinion. You do what you want with that information, but I think for a lot of people, focusing more on the dollar and not the percent would yield more positive returns in terms of expectations and realistic goals than focusing on a specific percent. So I think that's a slippery slope a lot of people fall into. All right, give me 1 second here, guys. Just updating something real quick before I forget, and then we'll get back into things. There we go. Okay. How's the SPY looking? We are above those 2 LOIs. This is a good, more bullish outlook here in general on the day. I think this is going to basically be our kind of like our make or break spot. On the SPY today, just looking at how things are boiling out right now, where, how do I say this? If we can stay up here, then I do think this is likely to get tapped today. I think things are going to change here in the next 12 minutes, so I don't want to lay out expectations yet, because obviously data, volume is all going to change once we get the JOLTS. When we get JOLTS coming in, that's obviously going to strongly affect the market here. So I don't want to get too ahead of myself in terms of expectations. But the way things are sitting right now, it wouldn't shock me to hold the upper end on the day. So I'm changing my thesis here. I was more anticipating shopping here and driving lower for JOLTS. But right now the market's seeming very resilient. And I think what's really important as a trader is to have an idea, and as you get more information, be able to change your idea. It's not that you're saying like you're wrong. I guess actually it is. Like you're willing to be more humble in the sense that you're willing to admit where things are changing, and you're able to take the real information in front of you and change your expectations. Where people I think lose a lot of money is where they're unwilling to do that, because they said one thing and they do something else. Now, I never promised you guys anything, but as it sits right now, if we can hold this upper end here, meaning we're above these 2 LOIs, then that does put the 685.54 on the map for the day. That can change in 10 minutes though. We could also just sweep it real quick, which would be pretty cool. I don't think that would happen, but I wouldn't be mad at it. IWM is still looking pretty good. Had a hard push up, getting a bit of a consolidation here. This is probably about a 50% retracement or so. Yep, 50% retracement. Look at that. Nice little retracement there on that move. So watch for a little bounce here in the next few minutes. Typically, I would look for a long entry, like literally right now on IWM. As I said out loud, I'm like, maybe I will. Typically, I'd look for a long entry right now on IWM. It's typically what I would do. I'm debating if I want to. I don't think I'm going to. I would typically take a long entry right, like I was saying here, right around here. It's off that 50% retracement here. You're building up a little bit. Your MACD's starting to flip. Momentum's still solid. Sometimes before data, we get kind of wacky price action, so I didn't really want to expose myself to that risk. So and anytime you guys, if you watch me live, you'll see sometimes I hesitate. The hesitation comes from when I take a trade with at least 90% certainty. I feel very certain, right? I'm not going to put my money on the line if I don't feel certain. I don't recommend you consider that either, right? You want to put your money on the line when you feel the most certain, or as certain as you can. And if you feel a little less certain, maybe take a lower risk, dollar amount, whatever. But I didn't feel certain enough and confident enough to take that trade. And that's okay. All in all, not mad that I exited NVIDIA here. So really kind of tapped out here at 330 at most, which is actually below my highest trim. I trimmed out some at 335 and 330. And we're just kind of consolidating here on this LOI. And in fact, now it's looking more bearish because you're showing that you're not breaking above here. So this could be a short now. Again, I'm not really looking to... I don't really want to take a short on NVIDIA because you got this 183 spot, which is what we played literally perfectly. The downside of playing that was the higher IV at the time. But in terms of price action, got in right on the tap and rode it back up. So you're super rangy here on NVIDIA where it may not be worth it. However, the reason why I'm highlighting this, if it does sweep back down about $1, that's going to drag SPY more than likely here pre-JOLTS in the next 8 minutes. So we'll keep an eye on. Eddie says he said full port. That's what I'm doing, G. All right, man. I feel better if you're gonna full port. I feel better if you full port like 6-month long contracts. If you're gonna make a boo boo, at least the market will be way more forgiving than you full porting a 0 DTE. RSP near the high of days. SPY still holding the highs. Q's pretty choppy flat. And IWM getting that little bit of a rally here since I said I would typically take a long. So we'll see if that actually gets a nice little cup and push here, a little rally. Let's check out our sectors real quick. Kind of get an idea of what the sectors look like here pre-JOLTS. Utilities right now, XLU, basically near the highs here, not too bad, up 0.78%. Energy getting a big day here. Now I will remind you again, it had a bad day recently, and then got another big day. Energy's been, if you've been keeping an eye on XLE, it's been very volatile. Which is a little abnormal. The main reason I would say energy has been more volatile, really in the last few months, is mainly due to energy and energy, nuke energy stocks, but mostly the demand for energy going up now as a hype thing, right, with AI and whatnot. So seeing the XLE be more volatile makes more sense. So it might actually be leaving just because of how people are prioritizing energy now. XLE might be removing itself from the defensive sector, so to speak, or one of the defensive sectors, because of that strong reliance on energy that AI needs to run, right? So that is something that I've been kicking around in my head because these top three ETFs, I should say, are my defensive sectors, right? It's your utilities, it's your energy, it's your consumer staples. They typically are slow, they don't do much, and more like defensive. When we see these green, the rest of the market typically is red. And vice versa, or no, I shouldn't say that. When these are green, the rest of the market is red, it can signal risk off behavior, vice versa. When these are red, everything else is green, it can signal risk on behavior. But that might change. I might have to reevaluate that with XLE specifically. I still think utilities are going to be the same in terms of supporting whether the market's risk on or risk off as our XLP. And I will say, as we're looking at the daily chart here on XLU and XLP, you're getting basically a downtrend here from the start of December on both, which could support the thesis of a risk on market, which if you're a bull is a good thing in general. That's also supported by the thesis, or not the thesis, but that's also supported by the death in volatility recently, and also IWM getting a nice rally to the upside as of late. So there are things that support this, the risk on thesis as we head into the end of the year. And conversely, look at XLK. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 green days in a row so far on XLK. So seeing that we're having red or a downtrend on XLP, a downtrend on XLU, and an uptrend on XLK supports more risk on behavior in the market in general. XLRE, it's okay day, 0.43. We do have that 30-year mortgage rate coming through tomorrow, so that will definitely affect the XLRE, so keep an eye on that. Materials pretty flat. Again, in a little bit of a downtrend here, tapping the 200 MA on the daily chart. So kind of look for a reaction here, actually, on materials. We're basically in the middle of this kind of chop zone here for the last month or two. And it's actually respected the 200-day MA pretty well. When it breaks hard, and looks like we get like kind of a V-bottomy look. But you're kind of at a decision point here after fluxing around it, a few times now. You're basically at like a pretty decent decision point here on XLB. It's pretty neutral, all things considered. So going into the end of the year here, we could see a decent move either which way on XLB. I don't know why this is on here. It's a split 2-for-1. This did not split. It wasn't $20 or whatever. Did it? I don't believe it split, right? It was always like 40 bucks. All right, anyway. Industrials looking good, up 0.3% in a nice little rally mode. Now, this is the other thing I told you guys. I was telling you guys probably back in early November to keep an eye on healthcare. Since then, healthcare has been rally, consolidate, rally, and then December came and kind of shot it down, which is kind of interesting to see. Now, part of my thesis here on why we're seeing a little bit of a retracement here in XLV is because we're seeing some outflows of healthcare potentially back into tech, which part of my bullish thesis was we were seeing outflows in tech, as you can see on my chart, and inflows into healthcare. Which this lines up pretty perfectly. You can go back to start of November, and there you go, start of November. So if you don't believe me, line up your charts right now. Look at XLK and look at XLV. And if you go from the start of, you can go to October 31st if you want, but start of November, downtrend on tech, big uptrend on healthcare, which is a clear rotation of money from what was the risk on asset at the time to potentially still a risk on asset. I don't, depending on what you're investing in XLV, it could be a risk on asset, honestly. But seeing a clean rotation there. Now, what I do like more than anything for the end of the year here is the fact that XLV it's coming down, right? But it's back in this consolidation spot. So all things considered, it's not falling down back here to like 144-ish, whereas the XLK is back about, it's a little shy of it, so maybe like 3 points shy, but it's back about where it was before its downfall. So the XLK comparatively has recovered enough where the XLV has not dropped the equidistant amount. It has not dropped the same amount when you're putting them side by side for the fall and for the rise, which is a good sign because that indicates that there's strength in healthcare, actually, even though it's looking weak short term, but there's more strength in healthcare as more money still comes into XLK as well. Looking at the financials, and I've said this before, I'm looking for financials to get a move into the end of the year here. So far, so good. Nice high and tight kind of flaggy look here. You're right around the POC on the daily. All-time highs are in earshot. You're not too far away. You got about 70 cents or so. Not too far at all. XLY, consumer discretionary, getting a little tired, but might just retrace here for a day or two, float around here. And then our comm services, similar narrative. Okay, we are almost at 10 o'clock, so we're going to watch the SPY right now. See where we go for JOLTS. Now remember, I'm not looking to play JOLTS. If I could have had a risk-free position in NVIDIA, I would have. I couldn't, so I'm not. So we're just going to watch and then kind of go from there. Pre-JOLTS right now, actually, IV is low, so we're underneath the 52-week rolling average on IV. Right now, at the money IV on your 0-day options, about 15%. Rolling 52-week IV is about 1643. IV percentile is 41% today, HP percentile 54. So all in all, lower volatility conditions. Let's see how the market reacts now that it is 10 o'clock. And guys, if you haven't already, do me a quick favor while we wait for this JOLTS data to come through and the market to react. I ask you guys twice a stream. I'm going to ask you once again right now, if you haven't already, do me a quick favor and interact with the stream in your favorite way, whether you're watching on Instagram, X, YouTube, Kick, or Twitch. Most importantly, if you could, drop a like on the stream, maybe say hi in the chat. Most of you guys talk to me over in the YouTube chat, so if you haven't already, pop on over there, say what's up. And if you haven't already, pop over to the YouTube channel, hit the subscribe button. Once we hit 500 subscribers, this will be an everyday show. So if you want the show to happen every single day, you like free stuff, and you like making money at the same time while I talk to you about things that really matter in life, like how chicken nuggets should be a main food source in your diet, but only the ones from Costco, because the macros on those are actually very good. You're going to want to hit that subscribe button. Once we get to 500 subscribers, we'll have more conversations about chicken nuggets every single day. Thank you for your support. All right, so we wicked down a little bit here on the spot, kind of very indecisive. Let's see, do we actually get JOLTS in yet? There it is. Okay, JOLTS came in at 7.6 million. Forecasted was 7.11. Now, what I like to say is this. Now, this is a beat, right? So this is good theoretically. There are more job openings showing a stronger labor market. So you go, okay, good news, not bad. However, hold up, wait a minute. It could be bad news, so the market might actually react bearishly due to the fact that we have FOMC tomorrow. So if the labor market is strong enough, right, hear me out. If the labor market's strong enough that we have more job openings, then maybe the Fed doesn't need to cut rates. The market's strong enough. Why do we have to cut rates? Interesting. Because typically the Fed will cut rates if the labor market's suffering. Because they go, oh man, companies can't afford to hire people. It's too expensive to borrow money. As a result, we have to cut rates to help the labor market. Because people aren't hiring people because it's too expensive to borrow money, you know, in theory, to train. Because when you're borrowing money from the bank, that affects everything, right? Your bottom line. So if they reduce rates, that allows that stranglehold to be released, and consequently, you can hire more people. Now, for this particular data point, how we're at 7.67, and we're forecasted quite a bit lower, about 500,000 lower. It's not a massive beat, but it's a comfortable beat. So what I would be more concerned with is if the event we saw at JOLTS was a huge beat, then that could put that inkling into the market that the Fed may not want to cut rates at all. And so far, you're seeing the Fed is pretty happy here. Or not the Fed, the market's pretty happy here because ultimately this was probably your best case scenario that we're coming in near near the goal, near what was expected, near the forecast, where you're not too lofty above or you're not too lofty below, you're like at it. So most importantly, and I said this at the beginning of the stream, so if you haven't been watching, maybe rewind that and watch it, or I'll reiterate here real quickly. This goes for FOMC and this goes for JOLTS. When the market gets data or information, it has two things to decide to do with that information. If it's bullish or if it's bearish. Now, those bullet points where we have data coming into the market, we have to understand that it is uncertain, right? Whether it's Powell speaking, the interest rate cut, JOLTS, whatever you're looking at, the market is pricing in uncertainty. We don't know what's going to happen. The market is uncertain at this current point in time. So what does the market do? It hedges, it gets a little defensive, price action shops, whatever. But when the uncertainty leaves the market, like we just got the JOLTS data right now and it was a small beat. When that uncertainty leaves the market feels more certain. Duh. Because it has the data, right? Before it was a big question mark. Now that we have the data, we know what the data is, we can react accordingly. Same thing with Powell and FOMC. If Powell comes out and is either neutral or dovish, the market more than likely will result bullishly, or I should say resolve bullishly to the upside because the uncertainty has left. We can de-hedge our risks. We can get rid of our puts. We can ride into the sunset because a outlying event of something bad happening has left the market, has left the table. The idea, that thought process is gone, right? So as we get data, and this goes for any data we get, anyone talking at a news event, whatever, the market will hedge prior to that information, prior to that data, because it's preparing in the event that it's bad. And if it's not bad, then the market goes, okay, let's resume the track up and to the right. That's typically what we see in general when we get big data points in the market that a lot of people risk playing their money into beforehand, and they'll buy puts or whatever, and not for the sense of hedging, but for the sense of, I think it's going to kill the market or whatever. And that's where I think people get tripped up a little bit. So in general, when you get these news events, when you get these data points, think of it as long as if it hits or if it is a small beat or even a small miss sometimes, the uncertainty leaving the market 9 times out of 10 is a bullish reaction, not a bearish one. What do you guys think? How we looking now? How we feeling in the chat? I'm feeling like today's going to be a boring day. That's what I'm feeling right now. I think the market, as it sits right now, is probably just going to kind of drift to the upside. If we can stay above these two key LOIs, I think we're just going to kind of drift up on the whole day. fact, I might actually take advantage of that. If Nvidia can stay north of that 183.30 as well, I think there's a good chance of just upward drift. What I want to see on the SPY here, so this is my plan now. Now that we got data out of the way, if we can come down and get somewhere in this neighborhood, basically like 684, so like only 30 cents lower or so, and hold there for a little bit. Worst case scenario, we come a little bit lower down this LOI. And hold this general spot north of 683.67 and 684. I'm going to want to look for a long position, not for a 0 day, but into basically the end of the day, like a day trade. So one that expires tomorrow or later this week, to place kind of a slower grind up on the market. If we look at our volatility, we never broke, for a heartbeat, but we never really broke that 1718, got shot right back down. So if we can get some level of retracement here on the SPY, that would more than likely support a bull narrative on the day. Now, IWM looks a little weak here, or it could come down a bit. And you got to keep in mind, IWM is near that all-time high. So I don't think it's going to break that without a catalyst, and that probably won't be until tomorrow. And the Qs right now are probably where we're going to want to find strength, right? It was weak at the open. We're trying to right the ship here. So if I want to be a bull on the day in general, especially on SPY, I'm going to want to look for the Qs to try to right the ship here, is what I'm saying. So I'm going to want to look and watch the Qs to get some momentum. Now, if we can't get momentum out of the Qs and out of IWM, which IWM I think is pretty limited here, to be honest with you. I don't think we're going to get much higher than high a day. There's a very strong chance that price action is just going to chop around today. And when I say chop around, I mean like we either go from this range here, which is where I'm contemplating along, to basically this consolidation zone here. So you're talking 70-cent range and stuck in here, or chopping around just shy under that. So like around these LOIs, or getting back to that original chop zone. I do think that 680 is off the table right now. So like I said, if we break the low here off the chop through JOLTS, that we'd sweep 680. I do think that 680 is off the table for what it's worth. That narrative could change if we get more volume, but without any real catalysts, with the exception of Trump's attending Vance's Xmas reception at 2:15, I don't think we're going to have a very eventful day in terms of price action, because if we were to have a more eventful day, we would see it like sooner than later. So it would make a lot of sense that we see the market kind of relax and bounce around, mainly due to hedging, like I said earlier, pre-FOMC. We saw a little bit of that yesterday. The downside, what contributed to yesterday's fall so rapidly, is that the market was forced to delta hedge to the downside as we kept breaking lower, and as volume came in, that's what gave it the drive lower. Today, that's not the case, honestly. It's not a similar setup. The market is getting more of a rebound today. And because of this kind of open, because of the price action we're seeing in the volume, this supports the narrative of not really going too much of anywhere today. So for some of you that are day traders, it may be wise to either scalp. So if you're a scalper, get in, get out, make your 10, 20% like we did on NVIDIA, play key levels and get out of the way, or just kind of watch. Unless we sweep a key high, a key low, where you can take advantage like I did with NVIDIA, you're probably going to be struggling for pennies today, honestly. You're probably not going to make a lot of money either which way, honestly. It's just going to be kind of a struggle, which when you think about things as I've tried to explain them as rationally as possible, it makes sense based on what we're expecting, based on what we already saw. And again, if a move were to happen, it theoretically would have happened off the back of JOLTS. But with FOMC so close right behind it tomorrow, it makes sense that we get a little push to the upside, give it roll back, and just kind of, again, sit in one of a few chop ranges between here and here, around this point, or down here. And either way, in all of these ranges I'm showing you guys, you're talking 70-cent range, you're talking maybe 50-cent range, and then you're talking $1.20 range. So again, unless you're scalping and you're timing the highs and you're timing the lows, which for a lot of people are very difficult, it's really probably not worth it. I will say that I would more than likely lean more bullish on the day than bearish, Originally, on the start of the day and in pre-market, I would have preferred if we saw a bear day, mainly for for what I want to see going into the end of the year. It would have been better, at least in my opinion, to drive price lower today, sit down there pre-FOMC, and then have FOMC blasted up back into the 685 or higher range. But it's not necessarily a bad thing that we hold the highs, or we hold a higher high than driving a lower area pre-FOMC. So all in all, because I know a lot of you watching right now are day traders, I would be very cautious specifically trading the market today. But I would just be cautious in general trading any name, because as I like to tell you guys, you always want the prevailing wind behind your back. And when the market is directionless, meaning it's not overtly trending down or overtly trending up, it's just kind of like, bouncing around, ping-ponging, zone A, zone B, zone C. You don't have the extra support from the market. For example, if I wanted to, regardless, long or short NVIDIA, doesn't matter. Well, maybe NVIDIA is a bad choice because it's like 10% of the SPY, but long and short, I don't know. What's not a highly shorted name that people like? Soundhound. Sure, it was just a random stock. If I wanted a long or short Soundhound, it may not have as much range as it could, just because there's less support from the market either which way, up or down, doesn't matter. There's just less push, right? Because people are just preparing for tomorrow, which causes the market to just kind of ping pong around, because not only are they preparing on the SPY, which you can see we're not going anywhere really, but you're also preparing on your individual names. You're hedging your bets, and the market's going to do that. But like I said, if I had to pick a direction, it would still be bullish. It would just be, if I'm going to take a stab, it's got to be at the right time. And that's kind of where I'm hanging my hat on the day. One more says, in my opinion, the market's waiting on the Fed decision and FOMC tomorrow before a substantial move. I would agree. Perceived bullishly, we push towards all-time highs and we ignite the Santa rally. Otherwise, sandwich, in my opinion, of course. I would agree with that narrative. That's essentially what I'm saying here. That's kind of what I think is it's the way to go. Like I said, with FOMC tomorrow, as long as it is either as expected or dovish, we are going to crack 700 by the end of the year. At least. I still think there's a world where, and it's a little bit of a stretch goal, but I still think there's a world where we tap 705, 710, which may sound a little crazy, but it's really not. Let's actually see what that realistically looks like here. So, that would be 700. Where am I? 700. About a 2% gain on the market. Roughly. We get to 705. That puts you around 3% gain. Is that impossible with... Whoops. Do not do that. No. Is that impossible with 2 weeks and 1 day left? 11 trading days in the year, right? 1, 2, 3, 4, 3, 13, sorry. 14, 15. 16 trading days in the year to make up 3% on the stock market? I don't think that's impossible. And again, that puts us at like 705. So looking at 700 is only 2%. So it's not ridiculous. And especially off of FOMC, we've seen FOMCs where, nothing happens, but we've also seen 1.5%, 2% days coming off the back of FOMC. So it's kind of where I'm leaning right now, is still a bull narrative into the end of the year. It's just, I think today's going to be one of those days where you probably want to slow down, especially as a day trader, or even not trade at all. Again, unless you're playing like a key spot, unless volume comes in and tells you something different. I think today you're going to have a very drab, boring day. Especially with the time of day that we're having right now and not seeing much of anything. Even our volume is dropping off. We're already under, in some of these 1 minute candles, 100K. Which, again, my metric, if you guys don't know this, my metric for day trading is I like to see the SPY at least 100K per minute, or at least 500K per 5 minute candle. So we probably fulfilled the 5 minute candle requirement. But as you look at these candles, my volume's right up here if you're watching your screen. 75K, 63K, 75K, 94K. The volume is already coming out of the market, and it's only 10:15. So we're not even at like noon. So whenever there's lower volume, that means there's less participation. When there's less participation, you get one of two things: very, very, very choppy price action, or because you're just getting ping-ponged with algos, or if a big whale comes in either which way and pumps or dumps the market, or an individual name like NVIDIA, you can get a big sweep. So either way, the risk is awful. When you get a lower volume environment, there's less liquidity. So for you as a day trader, that's just awful conditions to trade in, because you're either going to lose money on getting shopped around and going nowhere, assuming you're buying to open options, or you're going to get popped out of your position real quick if it goes against you because someone decided to come in and drop a bunch of money, or some news comes out that was unexpected, and consequently the market reacts very, very harshly. Whereas normally that data that comes out would be perceived still as harshly, but because there's so much more liquidity, that absorbs some of the cushion, some of the impact. So in environments of lower liquidity, you can get harder moves, or also no moves at all, which sounds a little foolery, but I promise you, if you think about what I said, it does make sense. Hatchet says, Adam, would it be worth doing an entire show on everything you look at in pre-market to gauge the market every single day? I see some of it every morning, but I'm not sure what I'm seeing. Hatchet, I'll be honest with you. You want to know what I look at? You want to know how I prepare? So, all right, here we go. This is how do I phrase this? Maybe I'll record this. That's a good question. So you may wonder how I prepare pre-market every single day. I'll tell you how I prepare. I wake up at 4 a.m., I go to the gym, I come home, I take a hot shower, then I sit down and look at my charts. Because I'm looking at my charts every single day for the whole day, there's not a lot in pre-market I'm really like looking at under a microscope so vividly until we're like 15 minutes before the open. And if you watch my show live, you see we talk about things that give me the idea of which way the market's going, but really I'm not staring at the market pre like 8 o'clock because it doesn't really matter. And it matters, but it doesn't, because I'm more concerned with what things are looking like closer to the open as a day trader. Now, other people have different strategies, and that's good for them. But for me, doing it this way doesn't allow me to have analysis paralysis. I'm someone who stares at a bunch of lines. You see I got a bunch of lines on my chart, and some people find that way too complicated. But for me, I love having as much information as possible. So if I stare at a chart, if I stare at pre-market data for way too long, then I'm cluttering my mind with lower confidence ideas, right? I'm looking at price action that may not be as relevant because the volume's so low, and it doesn't matter. It can matter, but it doesn't matter as much as when the market actually opens. Now, what I would suggest, and this is what I do at the end of the day, and sometimes you'll see me do it live in pre-market, is focus more on your daily and weekly candles. I think that is better preparation for the day because it kind of gives you an idea of where the market may look to go within each week versus staring at the pre-market. Again, other people have different strategies that work for them. Some people find a lot of value in pre-market trading. And I will say this, if there's a time that we have a big data event in pre-market, that's something you definitely want to be paying attention to. Or if there's a point in time where there's a lot of volume, like an earnings call, a conference call, things like that, that's when you definitely do want to pay attention to the pre-market. But on a regular Tuesday, typically staring at the pre-market, at least in my opinion, doesn't bear a lot of fruit. What's more important is to look at the daily chart, look at the weekly chart, and then use that information to plan intraday what are the possibilities considering any news events or catalysts that are coming down the pike for the rest of the week. But all in all, pre-market for me doesn't hold a lot of emphasis in my personal trading style. You might find things that work for you personally, but for me, I don't really focus too much on it. Again, like I said here, there are times where it does matter, but all in all, I don't think there is too much gravitas, I will say, in using pre-market information, at least in my personal trading strategy. How's that, Hatchet? While you answer me, give me 1 second, guys. I need to go grab a Spindrift. I'm grabbing a Spindrift today because Polar won't sponsor this program. We all need to go on X and petition Polar. I've got 85 viewers right now, so wherever you're watching from, tweet at Polar, DM Polar. Actually, I don't think they even tweet anymore. I think the last time I looked, it was like 2023. But we need to get Polar to sponsor a financial podcast. Mainly because it would just be funny because it's such a weird thing. Like, why would seltzer water sponsor a podcast, and especially Polar? But, hey, I just think it would be funny. So if you guys want to help me out here, let's get a Polar sponsorship. But today, Polar can kick rocks because we're grabbing a Spindrift. So hold on, I will be right back. This is a solid beverage. It is superior to Polar. Do you hear me? And maybe Polar, if you put an 8-pack of seltzer, at my front door, maybe we could talk. Maybe your product could be better. But this cranberry punch Spindrift, beautiful. Messi goes 85 viewers. Holy shit. I leave for final assignments and now Adam's famous. I am not famous. On a good day, I can crack 200 across all streaming platforms. So 85 is it's a modest day. The slide is not it, my friend. What are you hating on, Toby? What slide isn't it? What are we hating on? Nice. We got 10 likes today, guys. Appreciate the support. Thank you very much. All right, Hackett says, good, but what do you look at in the last 15 of pre-market and the first few minutes of open to determine price action for the day? I've started watching the first 15-minute candle today, doji across all three. Okay, so that's a better question. Not that the first one was bad, but that's a better, I could answer that more directly. So in the first 15 minutes, I would hold that price action more relevant. And for me, specifically like on the SPY, I look for my LOIs. So these LOIs here are key levels on the market that I've determined through a myriad of reasons, whether it's a high volume level, it's a weekly close, a weekly open, whatever. There's a reason why I have these lines on my chart, and they're going to be key levels of theoretical support or resistance. So when we're that first 15 minutes here, that kind of lets me know what range we're opening in theoretically. And as you can see today, that's why it was part of my thesis on the day is that we would shop in here potentially unless we broke this upside, and then that puts this on the line, right? So it's kind of, how do I say this? It's more of like a roadmap. So it's not a, I don't want you to fall into the trap of using pre-market data, and in this case, like my LOIs, for example, as a predictive measure fully on its own, because once we get this live price action, once we see where we're wicking, where we're bouncing, where the volume is, then we can actually react better. It's more of like setting I guess you want to say almost like a realistic expectation on the day of where we're going to go early in the market. And then from there allows you to continue to formulate your plan. The way that I like to think as I'm trading is very, I almost want to use the word liquid, right? It's very, I can formulate my thoughts as I go. Like, all right, this is the plan for now. If this, then this. And if you're in the Discord, you hear me say this all the time. I always say, if this, then this. Because in general, if this happens, then I take this action. I call it fishing. So setting your mind up, and this is me, I'm a very logical being, so it works well for me, but setting your mind up to have more stringent requirements to make a move makes you more accurate. For example, I'm not going to take a position unless I'm break over these two LOIs and this dark blue line, which is my 200 MA on the chart, and if I do, then it would be a call. And that's something I could decide down here. Now, I didn't do that today, so I'm not going to pretend I did, but I'm just saying that is something, a condition I can set down here where I go, okay, that would be a significant break. I'm breaking two LOIs plus the 200 MA. More than likely, I'm going to get a drive to the upside. And then, that would have been a good condition for me to set. I didn't do that. I'm not going to pretend like I did. But setting those goals, once you have that information in that pre-market, and then having those expectations set, again, that if this, then this criteria, I think will allow you to have a more stress-free way to trade, which is my favorite thing. If I can trade more stress-free, I'm going to. And that's kind of my goal in general, and hopefully I can pass it along to a lot of you guys who watch the program, where the way that I have been trading, I've taught myself to trade the most successfully is to mitigate my stress. And by lowering my stress, it allows me to think more clearly. Consequently, I make better decisions. I make more money, right? So that's kind of what I want to pass on to you guys, that you can set clear criteria for yourself and do an if this, then this, and then move from there. Wait, there's music to that, Toby? Oh, there's not supposed to be music. Good catch. There's music. Okay, hold on. You're going to see it for a second. I'm going to kill that because now I'm going to forget if I don't see it. There you go. I had no idea there was music on that. I mean, I did know there was music. I thought I killed it already. Thanks for the catch, Toby. Appreciate it. Okay, back to that. Is the thesis behind TMC swing shared in the Discord? It is not. Can it be? Sure. It is not yet. But it can be. Yesterday was a wild day for me, so when I have alerts set, I just, go along with it. So, and this week is a very busy week, so this is the time I've set aside today that I could give dedicated focus, and probably the end of the day. And just so you guys know, probably starting definitely starting Christmas week, things should be very normal, and I could settle in a bit more, and I'll be around way more in general, both in the Discord and on live, and hopefully we get like a more definite schedule for you guys, so you know when I'm going live. Like, I like to go live every Monday regardless, just because I think that's a good way to start the week. So I'll get a set schedule with you guys, but gotta wait until probably the week of the 22nd, as I got a lot of things in my personal life that are taking up a lot of random time, and like I've said to you guys, I don't want to make full commitments to you guys when I can't promise you things. I don't like to make promises I can't keep. So, I'd rather not say anything at all and fly by the seat of my pants for now than promise you guys are going to be here and not show up, because that sucks. Because I know there's people that I watch sometimes, like other live streamers in the entertainment space, not for like finance or whatever, but there's other live streamers I'll watch, and they're supposed to go live at 6 o'clock, and then they don't show up, and it's like, all right, well, what am I going to watch now when I eat my dinner? So I don't want to make you guys promises I can't keep. Eddie says, yeah, it's repeating sounds for like 2 seconds on repeat. All right, well, thank you for saying something, Toby. I had no idea, but I appreciate you saying something. Hatchet says, how do you evaluate shop versus bull or bear in the opening minutes? Could you elaborate on that question? How do I evaluate shop? All right, so are you asking how would I evaluate shop if something is going to shop versus if it's going to be bullish or bearish? Is that the question? Because I think I can answer that question. But otherwise, restate it for me, and then we'll take a look. Yeah. All in all, NVIDIA, good trade and good close. Right now, those contracts are around 295, so I still would have had some profit, but this would just be a boring, sweating trade. I would just be sweating it, and it would be boring. It has been consolidating now for quite some time. You might get a 5-minute reversal here. I don't want to touch it. I think NVIDIA is going to get pinned. It could pop here, but underneath this LOI, it might just get pinned down here and just kind of fluff around, so... I'm not going to look at that anymore. Let's put it back where it belongs. There we go. Okay. Yes. All right. So, kind of to elaborate on that thought, it's more or less, again, looking at your candle price action. So if you're wondering... If you're wondering how to predict whether the market is bullish or bearish versus shopping in the open, you're probably going to want to pay attention to how price action is reacting. Again, in that first 15 minutes of the market, or of the pre-market, to kind of give you an idea of where price could be. Now, what I personally use, again, are my LOIs, which is key support and resistance levels that give me an idea of range. The other thing you want to be mindful of, and this is something I personally use to trade, is the VIX, where VIX is positioned, where VVIX is positioned, because based off of the VIX and VVIX, it can also give an inkling of what you could expect on the day. Furthermore, looking at volume and then also looking at any potential catalysts for the day could give you an idea of chop. So example for today, I was expecting, and I was wrong on this, but I was expecting a chop between these two ranges here on SPY because we had JOLTS data at 10 o'clock, big green candle here. We had JOLTS data, and I was anticipating the market to kind of just kick around pre-JOLTS data. Now, that didn't happen. It did eventually rally up to the upside, but you can see here on my chart, it was only pre-JOLTS, you moved up to here, so you're talking like a $1.50 move, which is a very small range on the SPY, and even on the pop there, you only got another 40 cents. So really, all in all, from the bottom of the live market open to the high, you're really only looking at like a $2 range on the day. So ultimately, I could still argue it was like choppy, it just wasn't choppy where I'm looking for it to be choppy. And that reason why is, again, volume and then other things that we're looking at on the day. So we know FOMC's tomorrow in this scenario, or this particular day. FOMC's tomorrow. So we know that. So knowing that we know FOMC's tomorrow, we're anticipating a lot of hedging and preparing. So consequently, there's one or two things I look for on a day like today. It's going to be specifically volume. And it's going to be how we react with volume at key price levels. So here where we had those LOIs in the 200 MA, even here where we're back testing, again, this general area after getting a pop up, seeing how we react. But more importantly, let's look at the 5-minute real quick. The volume. Now, volume on the 5-minute chart here is really right on the edge of what I like to use as a safety net for understanding good volume and determining a good trend, which is about 500K. When we're sitting right around there. So in general, this would support a choppy narrative through the day. So I wouldn't say there's any one specific thing that I would use to predict whether the market's going to be strictly bullish, bearish, or choppy at open. I think it's a myriad of information. It's going to be your news catalyst. It's going to be volatility. It's going to be volume. It's going to be price action. I think if you take those 4 things, if I was to water it down, those 4 things would give me probably 80% of what I need to know on predicting the market's price action into open, or at least setting realistic expectations. So I think if you have that set in the back of your mind, those 4 things, you'll probably be more mentally prepared for the day and at least set your expectations. Because a lot of people will go into the SPY, or they go into Qs or IWM, whatever you like trading, every single day, and they're thinking they're going to get a repeat of the previous day. If it's a really bullish day, a really bearish day, and I don't mean repeat in the same direction, but I mean in terms of price action. And the most important thing is to take in the information around you before jumping right in, because you could just get chopped up, especially if you're on the buy side of options. And even on the sell side of options, it may not be advantageous, because going sideways isn't really great either if you're on the sell side of things, because yes, your contracts are going to decay through the day, but one wrong move in the wrong way, and you're going to be, up Schitt's Creek without a paddle. Because even on the sell side of things, it could still go against you in a heartbeat because volume's low. So these are things you want to consider. If you're trying to predict what happens in the pre-market, I would focus on those 4 things I said. I think those 4 things are going to make it more simplistic, or simplify how to predict what the market could be doing around open. What do you think, Hatchet? Is that helpful? I think this is the best way I would think about it. I mean, look at today for a great example. Even as we're sitting here right now, we're talking, and you guys are asking great questions. We're talking about things, which is fantastic. Unless you're trading an individual name that has volume and a news catalyst, does this price action and this volume give you the confidence, even if you haven't been trading for long, does this give you the confidence we're going one way or the other? Just generally in the chat, let me know, yes or no. Does this price action right now provide confidence as a bull or as a bear? I would argue neither. I would say it just doesn't provide confidence either which way. That's why it's important to look in the daily chart, because the daily chart will give you more information. But as we sit right now intraday, if I'm looking to day trade, I don't have confidence as a bull or a bear. And I'm okay with that. I don't have to force myself to make a trade, because I can always lose money. And I'd rather make money. And I think a lot of you would agree. And again, you don't even have to be much experienced to see this. You could be a novice trader and say, yeah, you know, there's probably not much opportunity here today. Probably isn't much going on. Not much to see in general. But you guys let me know if you disagree. Let's see. Just looking at some other names I got to peek on. Ooh, Path. Path is getting a little tired. Little tired. How's Course doing? Not too bad. It's Wendy's coming down for now. Interesting. Air Sculpt. This is a stock that I've been passively looking at. I took a stab on this a little while ago and I got stopped out for a small loss. This is a stock I'm watching now. It's a small cap. Could go into micro cap territory, but it's something I'm passively watching right here, actually. Like around this 286 spot, could find some support here on the weekly. All-time low is $1.53, which is still pretty far under this, you know. But this is one you might want to keep an eye on. If you like a little bit of a riskier name, could be something that might strike your fancy if you like fat removal services. I mean, Ozempic's got a lot of great things, right? So could more fat loss substitutions get a lot of hype? It seems like it did at one point. From here, getting back to that high at $12, that's still like a 400% gain on equity. So this is something I'm very passively watching right now. Not yet, but something to at least keep on watch for now. Hatchet says, so those four are pre-market indicators. Is there anything about price action in the opening 5, 10, or 15 minutes that you use to confirm or change your pre-market thesis? Also, can you please restate your 4 things? Okay, Brain, let me see. 4 things. I don't remember. I recorded it for you, though, so I'll upload it. What'd I say? Price action, volume, news catalysts. I forgot the 4th one. Because as I was answering your question, I was formulating my thoughts at the exact same time. I wasn't prepared for it, so I was just speaking off my dome. So I remembered 3. I will upload the video for you though. Kron's moving. Oh, Kron is moving to EB. Thank you, my friend. This is my baby girl, my baby girl weed stock. Getting a good push today. I sold some up in this neighborhood around 280, so I'm looking to see if we can get a continuation over 314. This is a stock I'm long on. I think I put a video on my channel about it. All right, Hatchet, going back to your question. Is there anything in the first 5, 10, or 15 minutes I use to change my Yes. So I said liquid. I meant to say fluid earlier. So I want you to operate. So think of it this way. Set your expectations in the pre-market, but be fluid to change them. So again, that's why I said operate with the if this, then this mentality, because allowing yourself to be fluid doesn't lock you into foolishly staying bullish or staying bearish when obviously the market has changed its position. So allowing yourself to stay fluid in that first 5, 10, 15 minutes, like you alluded to here, I think is where you would find that opportunity to then change your thesis if there's a reason. So again, here, let's use today for an example, right? This is 1 minute chart, right? I said, I want to see chop in here pre-JOLTS. I did not see that. Pre-JOLTS, we got up here. So once we got up here, I said, okay, this is going to be a hard level to break, but if it breaks it, realistically, it could put this on the chart for the day. We chopped around here and got a little bit of a rally until JOLTS, which is right here, 10 o'clock. Obviously, we didn't get up there, but that's where I changed my thesis. I said, okay, once we break this level, my thesis of chopping pre-JOLTS in this range is invalidated at that point because we broke the level. We changed, right? So now we adapt. Now we change and say, okay, my original thesis of chopping between 682.74 and 683.57 before JOLTS is now invalidated. What's my new thesis? Okay, my new thesis is, let's see if we float around here. If we get a confirmed break, which we did, then this puts that level on the line. So now if I wanted to take a trade on a confirmed break, well, break on a back test, which I would say right here at like 949 is. If I wanted to take a trade, that's where I would take a trade to potentially play for this level. I just didn't, of course, but that's what I would do. And obviously hindsight's 2020, but that's what I would do. Now, I would also look at if my thesis changed here. So we broke that level. While we're sitting up here, I'd look at other things at that time, like we were alluding to NVIDIA, for example, right? And we were looking at NVIDIA because NVIDIA swept that 183.30 spot. And remember, NVIDIA is like 10% of the SPY, so it is very important for this analysis. And I would look at how it's behaving in this area. Is it realistic that it breaks to the upside? Because if it does break to the upside, that will add a lot of bullish narrative for the Qs and for SPY at that point. So consequently, that would support my thesis of getting a break and run to this higher spot. That's just how my brain works. And that's how I yield the most success, is to take multiple pieces of information to piece it together to make sense. That's just because I'm hyper analytical and I like to take in as much information as possible. For some people, they operate very simplistically, and there's nothing wrong with that by all means. So my style, again, may not work for you, but if you are more of a more analytical or hyper vigilant individual where you like to take in as much information to make educated decisions, when you change your thesis, so again, my thesis was changed at this point, Then I look for things to support said narrative or go against it. So if NVIDIA and the VIX were just in completely different directions, then as we're up here, my thesis could still be correct. That we got a little bit more bullish because of whatever, Google got news or something, right? Just playing, what if scenario. Google got some news and it pumped the market here, but everything else looks poor, right? Comparatively, that would theoretically support my thesis still that we'd come back in the chop zone, that we're just overshooting the top line of resistance here and then we're going to get back down. So I again would harp on remaining fluid in your thought process. And when you get to, here's your sticking point. When you get to the point in which your thesis could change, look for things to support or deny that your thesis will change. So in this thought process, you go, okay, we're at the top line of my chop zone here where my thesis theoretically could change. If it does change, why is it changing and what is causing it to change? And then what is my new thesis? If there's no supporting evidence to change said thesis, then you don't change it. How's that? I think that was probably the best explanation on that subject. Whew, all right. We're going to wrap it up here in a minute. So guys, if you haven't already, do me a quick favor, like the stream. We got 11 likes today. Tell you what, if we can get to 15 in 3 minutes, then we'll go to at least 11. Normally 15 can't be achieved, so if we can get to 15 likes on YouTube, then we'll rock it to 11. So we'll see. Otherwise, like I said, today is going to be one of those days where it's going to be, like I'd like to say, a fishing day. You set your targets, you set your alerts, you go about your business. Or today, with FOMC, it changes things. A good shopping day, as I like to call it, where you do your charts, you look for some names that you're interested in potentially swinging, seeing if there's opportunity there, when to pull the trigger, etc. Like preparation, theoretically. Today's a good day for that, assuming we see more of what we're seeing today so far. Hector says IW pushed to all-time highs, but this makes no sense. Also, NVIDIA is moving. Yeah, NVIDIA's around that 185 spot. I wouldn't hold a lot of credence. Now, I could be wrong because when I end my live stream, things change. So you guys know this if you've been here a while. I wouldn't hold a lot of credence in a lot of upward momentum today. Not saying it won't happen. But I think you're going to see IWM be pretty sticky here at around 252. I don't think it's going to go higher or lower, to be honest with you. I think we're going to just kind of float here or a little under for like a majority of the day. I think there's a strong chop narrative on IWM. I think if anything, actually, where the opportunity could lie is with your Qs. However, I don't think we're going to see much more upside on everything. Like, we're going to be limited. This 685.54 spot, I think, is going to be as high as we go today on the SPY. For the Qs, I think you got a little bit more juice here. You're not getting up to this, so don't even think about it. But you could have a little bit more juice here on the Qs. So in this case, Hatchet, I would use post-market, after-hours action from yesterday. So use this yesterday's high in the Qs, potentially. Mainly because NVIDIA got some news after hours yesterday, so that pushed, obviously, the NASDAQ a little bit. So I would look, because I'm not anticipating a strong move to the upside, but still kind of like a slow plotting move, potentially, that I would look at this level as your top, potentially, is 625.61 on the Qs. Which is still a decent amount of upside here. It's about $1, but nothing like that I necessarily want to put my money on the line for. I think IWM is just going to get pinned here. It doesn't make a lot of sense for it to break all-time highs until after FOMC if it does break. This weekly is ready to freaking rock, though. The weekly in IWM is ready to rock and roll. It is ready to go. EB says, love that explanation. Hell yeah, man. Did we get it? Did we get the likes? Let's see. What are we up to? 12. All right. I knew it wasn't going to happen. But I appreciate you guys taking the time to support the stream as per usual. So that's probably going to wrap it up for me today, guys. I mean, I gave you guys a lot to think about today, honestly. I think it was a very good informational stream. You know, not too many laughs. Made a little bit of money. We learned something. I think that's what we can ask for here. That's my goal here. I want to be like the Bill Nye of finance, but way less like nerdy and more entertaining, make you a little bit of money, teach you things along the way. That's kind of like my goal here. Make it as simple as we can, because this doesn't have to be that hard, but some people make it seem like it's the hardest thing in the world. It doesn't have to be. A lot of it's mental. So my goal here is to make it as achievable for you watching at home. So if you like that idea and you want to support the program, you guys know how. I've said it twice already. I appreciate your support as it stands. It's probably going to wrap it up for the week for me, guys. I don't know when I'm going to be live next. I'm going to shoot to be live next week. I'm in the process of moving. I don't know when exactly I'm moving yet, but it could be at a drop of a dime, essentially. It's complicated, but it could be at a drop of a dime. And then obviously I got to get set back up with everything. Not to mention getting settled in a bit. So I'm shooting to be live pre-Christmas again. I will let you guys know. If you haven't already, go follow me on the X over there at Atomcash, where I'll give you guys updates there. I also post some stuff on there and some funny things about how I'm gifting my wife a can of cream of chicken soup, or I don't know if it's technically soup, but a can of cream of chicken soup for no reason otherwise than outside of the fact that it's just a bizarre thing to do. So if you want to be updated on that saga, make sure you follow me over on X. With that being said, guys, that's going to wrap it up for me. I will give you updates on when I will be back, and maybe I'll make a video or two while I'm gone. Maybe like no face cam or something, just to put something out there for you guys. But if you haven't already, again, follow me and join the Discord. I'll be there every single day regardless of what happens. And like the market likes to do, it does a big jump or a dump right before I try to end the stream to kind of try to keep me around. But today, I don't care. You're going to bore me later, Spy, and I'm not going to stare at you for too much longer. So, guys, like I like to say, some say you need an edge to trade. Well, I like to look at things from a different angle. That's always what you get right here on the Atomcash angle. Guys, have a great rest of your day. Please trade smart. Do not do anything stupid tomorrow. Please, if you cannot control your impulses, do me a favor. Don't even trade. Don't even log in. Take the day off. Delete the apps from your phone. Don't open your computer. If you can't control yourself, please don't even show up. Trust me, you'll thank me, and future you will thank you too. All right, that's going to wrap it up. Have a great day, guys. And remember, precision beats prediction every damn time. I will see you next time right here on the Atomcash Angle.
The time has passed, and that's a wrap.